let's get into the Eurodollar. And like I'm five. Explain to me like I'm five, because I have done my research and I have tried to understand it, but I can't. I just cannot get my head around what the Eurodollar is.
Well, that's the thing. There is no Eurodollar. And then even the term itself sort of lends itself to that sort of misunderstanding. It's not like there's physical stacks of paper with just a different picture of an offshore president or something on them. There's no currency. It's a ledger-based system. But what has happened is that...
Well, where did it come from? How did it...
Nobody really knows, to be honest with you. There's all sorts of origin stories. Ironically enough, the Soviet Union not wanting their dollars to be confiscated by, President Kennedy or Eisenhower back then, started storing these dollars in European banks. There's also vagaries of the breakdown of the British mercantile system, and especially after the Suez Crisis in the 50s, where more and more the world stopped using pounds and started using dollars. But to transmit transactions, to transmit currency across the world, it was easier to do it on a ledger-based system, especially with the communications technology. You could send a telex around the world at the speed of light and then have that settle a transaction. And we don't need to wait for currency to be exchanged physically from one place to the next. So as long as we have these institutions that we all agree on are good people, or at least going to follow accounting rules and internal conventions, we allow them to keep this ledger system. So instead of me giving you a physical Federal Reserve note, say a $5 bill to pay for something, transacting from one country to the next, we just have a couple banks keep track of who owes what. So it's a ledger virtual currency system maintained by the banking system.
So, okay. So it's a database.
Essentially, yes. It's blockchain. It's really what it was.
Well, but who maintains it?
The banks.
But what, every one of them has the same one? Everyone? How does it work? You say the banks, are these high street banks, these commercial banks?
There are banks that operate in the system. Yes, many of them started out being city banks or Swiss banks. And long before the Eurodollar showed up, there was this ad hoc correspondent network that existed for many decades, even centuries, going back to the early days of the British Empire system. So banks that had transacted across the entire world had relationships where they knew each other very well. And so when the Eurodollar started showing up, or when this need to overcome Triffin's paradox in the late 50s became paramount, they just started...
Explain Triffin's paradox.
It goes back to the flaws in the design of Bretton Woods.
Okay.
Bretton Woods was the post-war monetary era, 1944. John Maynard Keynes and Harry Dexter White said, how is the world going to work after World War II is over and the Allies win and the Axis is vanquished? And they said, we don't want it to be a purely international currency, a fiat, entirely fiat system. So they made sure that the pound and the U.S. dollar would be backed by national stores of gold. So it was, in some ways, at least apparent, it looked like the old system did. However, as Robert Triffin eventually said, there's this natural tendency or inherent paradox in that system, because you have to have, in order to have a global reserve currency, I think this is part of the thing that most people misunderstand. What is a global reserve currency system? What is it supposed to do, and how is it done? How is it actually accomplished? And to have a global reserve currency means having a global currency that's useful in enough places, and enough of that currency available in enough places that very different economies, very different systems can intermediate through that currency very easily. And to do that, you need to have currency, if it's an international reserve currency, in excess of the national reserves backing it. So what Robert Triffin said is, for example, the US dollar, by using that as a reserve currency, that meant there needed to be US dollars in enough places around the world that there would be more US dollars than there are gold backing it inside the United States. And eventually, because it's convertible, people would convert their US dollars outside the US for gold inside the US, draining the US of its gold, therefore eventually leading to complete chaos and unbacked currency, which is exactly what happened in the late 1950s. The US lost a ton of gold because there was a lot of these dollar balances outside the US in order to mediate this wave of economic globalization, financial linking, trade, and everything else. So the global US dollar system, this Eurodollar system, was essentially a way to work around tying the currency outside the US to national stores of gold and reserves.
Right.
So it was a way to circumvent all that and do so in a very clandestine, quiet manner that nobody in the public really actually caught on to it.
Right. So say Jeff, I've got my bank here in London, and I've got Eurodollars in my bank, and you've got your bank, and say you're in France and you've got your Eurodollars. How do we keep each other honest? If I send Eurodollars to you, how do you know I have those in my system? Are we all sharing one database?
Essentially, yeah, it's not really a database, especially in the early days. It's more about reputation. It's about traders back then knew everybody else's businesses. So if you were doing something wrong, if you were just conjuring, outside the rules or outside your own conventions, we would know about it, and we would no longer transact with you, and you would be out of business.
But how would you know the balance I claimed to have was my actual balance? I could just put a little bit more in there. How would you know?
In terms of
Eurodollars, you say, because essentially if it's a distributed ledger, we all know how many Eurodollars are in the system. And at the end of each day, I transact with other banks and I settle my Eurodollars with them and vice versa. How do we all know who actually has what? Does everyone
double accounting?
Oh, it was done through double accounting.
Yeah, so your numbers have to match my numbers, which match the guy over here and the guy. We're all basically, there may be a bunch of participants in the system, but everybody's numbers have to match at the end of the day. And if they don't, they get settled in other ways. There are internal conventions, ad hoc associations where you have to follow the rules, and if bankers don't like you, they'll kick you out of the association. You're out of business. So it's essentially an honor system.
An honor system. Okay, and how does liquidity go into it?
It's created by that system.
But how? Explain to me how.
Balance sheet expansion.
Okay,
So
keep going.
This is where it gets really complicated. So if we're operating on a ledger money system that's internal, what expands the ledger? In something like blockchain, it's hard coded into the blockchain, right?
You can't expand it unless you mine more Bitcoin.
Exactly. Yeah. But in another distributed ledger other distributed ledger system, you can expand the ledger based on everybody is agreeing that the ledger has been expanded. So if I say, for example, no different than a fractional reserve lending system, that I have assets and liabilities that I want to add to my balance sheet, that I'm going to create some form of transaction that does both of those things. So if we transact back and forth between, say, you're a bank in some other location that wants to borrow dollars, I can create them in the same way that any other fractional reserve system creates dollars, by creating a deposit liability and a cash asset. But it's not actually cash. It's cash and equivalents. If you've ever read balance sheets of banks or balance sheet statements in banks, they always have that little word, the and equivalents there, because there isn't cash here. So it's all about creating assets, double accounting, and offsetting liabilities.
Right. So if that bank wants to create loans, say they want to loan a business $1 million, that creates both an asset and a liability.
Right.
But they're essentially printing money to create that loan.
Out of thin air.
Right. And if that loan fails
then you have a balance sheet issue.
And is that something that happens?
Yes, absolutely.
But this just sounds like a system, like a all boys club. We can just create money as we need.
Yep. Now you can understand why we got to 2007 and 2000. Where did subprime mortgages come from? Because eventually when you get into recency bias and confirmation bias, you start thinking, this is great. This is awesome. We're financial institutions that can basically print money and intermediate it at the same time, which means we can do anything. So after a while where it appears like nothing goes wrong, you start thinking nothing will ever go wrong. And so everybody just starts creating money out of thin air and doing the stupidest things with it because it seems like it works and will always work.
So we'll take all these mortgage liabilities, we'll wrap them up,
and we'll sell them to everybody.
We'll sell them to everyone.
And including each other. We'll buy them ourselves. It's even more complicated than that because then you use those securities as the basis for some of these funding relationships and repo and derivatives and things like that. But by and large, that's what it really is. It's a cabal of insiders that control money. That's how we went from, the 1960s and 70s with little quaint banks. And yes, there were state regulations, national regulations, making sure that banks didn't cross state lines, but even international banks were all tiny. Then you get into the 90s and 2000s, banks are everywhere. Financial institutions are everywhere. They're huge. It's like they've taken over because, as the Austrians say, Cantillon effects, those who create money get the benefits first. They absolutely did that. And so where did too big to fail come from? That wasn't the government, that was the banking system wanting to hold on to the status quo, which privileged them. Not just privileged them in terms of being able to create this money and keep this ledger system going, but also the information asymmetry that left them on top of everything.
But was it also that they could create the economic boom by having control of the money, which would ultimately lead to the success of the banks and the people who are making those decisions being paid well, receiving big bonuses? Is that essentially what creates that contagion?
Yeah, and look, let's face it, that there were positive benefits to this. Again, there's a reason why governments let this system go for as long as they did, because by and large, apart from the great inflation, but especially the 1980s, 90s, and middle 2000s, which was called the so-called Great Moderation for a reason, because it did spread prosperity around much of the world. Think about China, emerging markets, China in particular. 1980s, China was an agrarian subsistence economy. Nowadays, it's an industrial powerhouse. That was financed by this monetary expansion in the Eurodollar system. So it's not like bankers were just a bunch of evil, greedy bastards who said, we're going to just create money for our own benefit. They were doing it because they were filling a role that the global economy needed. Again, Triffin's paradox. As that happened, it created GDP and output around the rest of the world, created prosperity through many of these places. It started getting into extremes where it thought, well, let's do more. Let's do only more. Let's do riskier things because it can't possibly go wrong. Look at the prosperity we're creating here. And that's what happened. Natural human cycles, natural human fallibilities, except there was no check on that system. Because it was not perfectly, because it was incredibly elastic, the money creation function just got way out of hand.
And is there any oversight of this Eurodollar?
Not really.
Huh.
And do we know how much money is in that system?
I have no idea.
Crazy.
And that's the thing. You go back to, say, the 1960s, 70s, a few institutions like the BIS tried to keep track. Because this is offshore, first of all, it's outside the regulatory authority of anybody. So you have a bank in the Cayman Islands or the city of London or Zurich or whatever. They may be physically located in those places, but those places, the governments in those local jurisdictions have privileged the banking system and said, okay, you're a bank in the city of London. As long as your clients aren't UK citizens, we don't care what you do. So if you're an international bank and you want no regulation, set up shop in the city of London or in the Cayman Islands. You go to the Cayman Islands, where it's this massive US dollar denominated redistribution point for the Eurodollar system. You would think these huge banks are all located there. There aren't any banks on the island. There's no big vaults, no cash there. It's all accountants and attorneys and lobbyists.
So is it just a big IOU system?
Yes. Claims. So we started out with claims on actual cash, but this system is more efficient when we don't have to transact in cash. So instead of me giving you actual cash, I'll just pay you next week. So now we create a series of cash flows that are treated as cash, and we'll even discount the value and call it a present value and say that's worth this future cash flow that I've just created. It's worth X. Now I put that on my balance sheet, and it's as if it's actual money.
Where does this turn up in the economic system? Where does it turn up in the economy? Who are using these Eurodollars? I know these banks are, but where's the output going to?
Loans. Debt.
And
securities, financial markets.
And how's that turned into actual money that people can use?
When you go to the gas station or grocery store,
Yeah.
Do you use actual cash? Or do you use a credit card, a debit card, or your phone?
Well, yeah, I use any of those. But
Or a check?
Yeah, but my assumption is that the banks in the UK, there are settlements between them. Or are they the same, cash and equivalents?
It's all ledger money system.
Everything's ledger money system.
Even ATMs nowadays aren't even used. And it's been this way for, like I said, over a century. So even before we got to electronic payment, cash, debit cards, and all that, people wrote checks. And what is a check? A check is every bit like cash, but it's a paper claim on another bank's cash. So you go to the grocery store, I write a check, I give the grocery store a check, they give me goods. Therefore, I've got there's a legitimate real economy transaction that took place. But what happens behind the scenes? This is the part nobody ever thinks about. Behind the scenes, that check is then presented for payment from one bank to the next. And so all the bank has to do is say, oh, I'll credit you this number of dollars on your account with me. We don't need to exchange any cash at all. It's just a ledger book entry system.
So the Eurodollar actually has nothing to do with the dollar apart from the fact it's pegged to it?
It's not pegged. It's just denominated in U.S. dollars out of convenience.
Fine.
So it's not actually U.S. dollars or even claims on U.S.
Well,
dollars.
what does it peg? But if I have one Eurodollar, is that worth the same as one US
Yeah,
dollar?
because there is no Eurodollar. Eurodollar is itself a derivative term. It's euro simply means offshore. So you see the term euro in front of a currency,
Offshore dollars.
offshore dollars. So these are dollars that exist outside the United States, except they're virtual dollars.
So if I wanted to, say me, you, Danny, Jeremy, say we created our own little economy between us, we could do a double accounting. We could call it the Peter dollar, and we could create 100 each, and we could transact between ourselves if we wanted to.
Right.
But then maybe I want to go and buy a car, and I could use that, and I would have that relationship with that bank to turn that to create an asset and a liability outside of our little system.
Yep. It's essentially what happened in 2017 with the ICO craze.
Yeah.
Everybody tried to create their own coins, which is basically let's recreate the Eurodollar. And the Eurodollar wasn't itself a brand new innovation either. Ghost money and ledger money goes back centuries. You can go back to the bullion famine in Europe in the 14th and 15th century for ghost money and fictional currencies that arose because of a shortage of silver coin across Europe. So this idea that we create our own currency amongst a small group of people, distributed ledger, and just keep track on a ledger, that goes back centuries. This is something that humans have done in any situation where actual official money becomes scarce. When it becomes inelastic, we create other means of payment because money is a tool for commerce. It always comes back to commerce and economy. And if there's a shortage of money, commerce demands you create new forms.